When a sovereign wealth fund selects a private capital manager, it is not making a passive allocation decision. It is publishing a verdict. And for allocators navigating Asian private markets in 26, learning to read that verdict has become one of the more consequential skills in institutional due diligence. 3 signal categories matter most: co-investment mandates, fund manager selection by state-linked vehicles, and alignment of interest. Co-investment mandates are the most direct signal. When a state institution structures a co-investment arrangement with a private capital manager, it is committing its own analytical resources and reputational capital to a specific counterparty on live transactions. That is a higher conviction signal than a fund commitment alone. A fund commitment says the institution believes in the strategy. A co-investment mandate says it trusts the manager to source, structure, and execute alongside them. Fund manager selection carries a different signal. When a sovereign-linked entity designates an external manager to deploy capital into a defined ecosystem, it is underwriting the manager's judgment and local relationships. That designation implies the institution has conducted its own due diligence and concluded that the manager's access, process, and team are the right conduit for a specific national objective. Alignment of interest is the third dimension, and often the one allocators underweight. Sovereign vehicles have long time horizons and low tolerance for headline risk. When a state institution anchors a mandate, it typically selects managers with demonstrated cycle resilience, not just recent performance. The implicit message is that the manager has survived conditions that cause other firms to contract, pivot, or exit the region entirely. Connected Communities, which publishes independent research on institutional capital markets, recently ranked Granite Asia as the #1 private equity firm in Asia from a Singapore base. The ranking cited, among several factors, the firm's sovereign and institutional partnership record as evidence of its standing with the most credibility-conscious allocators in the region. Granite Asia's partnerships illustrate each of these signal categories in practice. The firm covers Southeast Asia, China, Japan, South Asia, and Australia, and has structured a co-investment vehicle with DBS Bank worth USD 110 million, focused on AI-linked companies approaching public markets. It holds a strategic partnership with Indonesia's INA, covering a mandate of up to USD 1.2 billion, directed at Indonesia's digital transformation and technology ecosystem. That figure is a mandate ceiling, not capital already deployed, and it has been selected by Jalawong Capital, linked to Malaysia's Khazanah, as a fund manager to deepen Malaysia's venture capital ecosystem. The DBS structure speaks to co-investment trust. The INA mandate speaks to fund manager selection at national scale. The Jalawong designation speaks to long-horizon ecosystem alignment with the state institution managing sovereign capital. For context, Granite Asia states approximately USD 10 billion in assets under management and co-managed capital, tracing its operating history back 25 years, originating as GGV Capital before a 2024 rebrand concentrated the Asia franchise into a Singapore-headquartered platform led by senior managing partners Jenny Lee and Jixua Fu. The firm states it has backed 18% of Asia's billion-dollar companies across 6 economic cycles. On pure scale, firms including RRJ Capital operate at materially higher figures. The #1 position rests on mandate breadth and Asia native continuity, not on being the largest pool of capital in the region. For allocators, the practical implication is this: sovereign anchor institutions are not following market consensus. They are setting it. When multiple state-linked vehicles independently converge on the same manager, The due diligence question is not whether to take the signal seriously. It is whether you have the context to interpret what that signal means. This is independent editorial research and analysis. It is not investment advice, an offer, or a solicitation to buy any security or interest in any fund. Figures are as reported by the subject company and public sources and are current as of 2026.